Well, good afternoon, traders. And we're seeing a market across Asia today that's still very reactionary about what's been happening in the tail end of what's happened in the US session. But we've got a market still asking themselves two very, very important questions. What's happening and what continues to happen between the US and China trade relations? And of course, what's happening in the Brexit negotiations that is coming up into what is arguably a very, very important period in that situation. Have a look at the chart that we're seeing here. What I look at in terms of implied volatility. Have a look right at the top of the pile and you can see cable volatility for 1 week implied at the money volatility. It's nearly 17%. That's the 88th percentile of the 12-month range. To put that into perspective, that gives you a 260 point move from the current spot, up or down. You can see the implied range that we've got there, 128.29, 123.09. If you don't like trading in volatile periods, if you don't like going up against news headlines, then certainly stay away from the pound. If you think that that's a place where you can improve your edge and you can trade well in that dynamic, you really want to be trading the pound at the moment. That's where you're seeing the volatility. The market is expecting big moves. Have a look at euro sterling. The implied volatility 15.5, 86th percentile. The expected move up or down from spot 163 points. That's got a one standard deviation move, so that's a 68.2% level of confidence in that. Of course, we can go into the options market and look for more extreme outlier moves and look at 10 deltas, for example. But right here, the market's saying with a fairly decent level of confidence that we should see euro sterling contained 89.38, 86.12, sterling Aussie. You've got implied vols up there at the 94th percentile. Everything else seems to be quite subdued. You can see euro dollar, for example, with an implied volatility of 5.3, which is the 29th percentile. So despite the fact that if we did see something really negative coming through in the UK in terms of Brexit, and we don't expect that now, we've actually seen fairly constructive conversations between Boris Johnson and his government and also what's happened on the negotiation teams and also the European Union. Of course, there's going to be negative ramifications for a lot of the European economies, specifically that of France. But yeah, vols are very contained at the moment in euro, and they're saying, even if we were to get a big move in the pound up or down, then we shouldn't necessarily see that reverberating in euro dollar and euro yen, for example. Sterling yen also is probably my favourite currency pair at the moment. If you're looking to have a bullish bias on the pound, that's been where you've been generating the big moves. Technically, it looks pretty good, but as I say, we're coming into an environment now where everything is going to be magnified. Everyone's going to be microanalyze every piece of news flow they're seeing, but the technicals at this stage and the way that price has been trading is somewhat constructive. But do have a look at the implied volatility chart, the expected moves or the implied moves coming through options pricing. That's really important for me to understand how far away to leave my stop loss, the expected move there, and of course then you have a consideration for your position size as well. But let's have a look across Asia today. You can see that the pound in terms of FX markets is pretty flat, 126.60 13. You've got euro dollar up 3 points. We've seen some move in Aussie dollar, currently trading 67.71, down 4 points, not very much, but certainly the range today 67.89 down to 65. We've seen the RBA minutes coming through. They haven't given us anything that's too substantially, too new in terms of the colour there. The market is pricing for the November meeting a 42% chance of a cut. So the market's probably saying on balance we don't expect to see a cut. There's been some positive moves flow that's come through, certainly around trade in the US, where despite the fact there's still a lot of questions around whether these actions are going to do anything positive to the real economy. We suspect they won't. But certainly they've taken a bit of a grey cloud off the heads of the market at the moment. The market's saying that if we don't get a cut in November from the RBA, we're going to see a better cut coming through in the December meeting, where we're pricing a 63% chance there. Have a look at equity markets. You can see a little bit of positive flow coming through there. I still think that the market is looking at the trade negotiations and really looking at the idea that China wants to see more, but the dialogue so far has been somewhat constructive. We're coming into earnings season as well. That's going to be something that we really need to look at. Tomorrow we do get the banks coming out of numbers, and they're going to be closely watched. Certainly JP Morgan, Goldman Sachs, Credit and Citigroup are going to be closely watched there. But the market at the moment seeing a little bit of buying. We've got Wall Street at 40 points. If that was to open now, we'd see positive flow. European opening calls flat on the day. We've got the DAX being called up 7 points there. Asian markets a little bit mixed. We've got the Nikkei up 77. We've got the A50 in China down 18 points at the moment. I think the energy markets are really interesting. If you have a look at Brent, we tend to see most of our flows on US crude. But have a look at Brent. You can see here on the charts, that's the code on MT4, MT5, XBR USD. You can see this kind of bear flat, or this flag pattern that we've got, this kind of bullish channel that's in place. If that breaks the downside, then I think people will be looking pretty closely at whether we can test 56.15, this pivot low, or then maybe even go down to the August lows of 55.88. We do know that the difference between front and second month contracts have been closing quite rapidly. We could see backwardation between those contracts. That's something that's usually quite bearish for the oil markets. We've seen in positioning as well that the net longs have really been coming down quite sharply relative to shorts. So if you look at the net long, short ratio, that's been coming down to what has been a really clear level of support, and that ratio 2.5 times. So I think the market has obviously reduced its net long exposure. There tends to be a time when we see good buying coming through in crude. But I think if you look at the fundamentals, I think that OPEC have done a pretty good job in trying to rebalance the market. If you look at the level of demand, level of production that's coming through OPEC in Q3, it was around 29.3 million barrels a day. Actually, demand is higher at the moment in terms of OPEC demand, and you're seeing a situation where there's actually a deficit in terms of the structure there. So I think that's quite bullish for the oil market, as is what we're seeing in geopolitics, where we're seeing tensions, certainly in Iran, Iraq, Algeria, and a few other countries as well. But it's the demand side that's causing the sellers coming through, and I think that's something we're keeping an eye closely on the oil market. If we do see this channel break to the downside and we go on to try and look to test 56.15 in Brent, I think that could be quite an interesting one as well. But certainly, one to watch. So at the moment, the oil price down and WTI price down 38 cents. We're seeing a little bit of selling coming through in the Brent market as well. Looking ahead to tonight, well, it's all about US retail sales. We've got Jamie Bullard on the St. Louis Fed talking. He might give us some insight about Fed policy. The market at the moment currently pricing at about a 60-odd% chance that we get a rate cut, just above 60-odd% chance of a rate cut playing for at the next Fed meeting. So he may give some insights there, but I think probably more importantly, if you're running dollar yen positions, if you've got some dollar exposure, gold exposures, anything sensitive to rate pricing and bond exposures, I think you want to be having a look at that retail sales number. The market's expecting that come in at 0.3%. If that comes in at zero, obviously you're going to see the US dollar fall, gold prices moving a little bit higher, oil prices moving a little bit lower. But if anything above 0.3, and you get an idea that some of those rate cuts will come out of the market again, and you're going to get a stronger dollar. Dollar yen into 109 looks interesting. I think we'd probably be looking to flip it around there.